great weekend. Just having a look at the charts this morning, you can see that stock futures are seen mildly positive. Fixed income then a touch lower, bunds down by around 4 ticks, but really the kind of more thing that jumps out on the screens at this point in time is the currency markets, with sterling underperforming. We've just seen, just before we begun talking here, we've just broken the overnight lows in cable, and we're sitting just up the 124 handle. Cable down about 60 pips, whereas euro dollar is trading in positive territory at the moment, albeit just slightly, but sub pivot. But there's a little bit of a divergence with sterling underperforming. We'll get into the reasons why shortly. But getting really into the crux of the weekend news, because it will help probably explain why some of the moves are apparent in the charts this morning. And starting off with France, where this chap, Emmanuel Macron, has extended lead over Fillon and closes on Le Pen in the French race. So let me just get you up to speed on what the latest is here in France from over the weekend. Another endorsement for Macron. French press have said that socialist lawmaker Carachet has announced that he will now back Macron. This, of course, follows Francois Bayrou, who publicly announced the backing of Macron with that centrist alliance from last week, which, of course, has created a bit of further support and backing then of Macron, as we saw, which did alleviate some of the initial concerns which were prevalent in the market really for the first half of last week. A Odoxa Dentsu poll published on Sunday showed that Macron is gaining 25% in the first round, compared to 19% for Fillon and 27% for Le Pen. So highlighting for the first time, Macron has taken a 6 percentage point lead over Fillon in the first round. Macron would then defeat, according to that poll, Le Pen 61 to 39% in the runoff in the second round. So as you can see, that re-widening, if you like, of Macron and Le Pen, of what was drawing closer or narrowing only about, really a week and a half ago. A second poll, Kantar Sofri poll for Le Figaro, showed basically a similar trend. So we're definitely seeing, for the moment at least, Fillon has very much fallen by the wayside, with further negative press over the weekend, all the more benefiting then of Macron. And then in addition to this kind of some influential members backing the otherwise fairly inexperienced independent candidate in Emmanuel Macron, has helped just kind of soothe some growing market concern that was in the marketplace this time last week. So maybe some of the reasoning why the euro is holding up in positive territory comparative to the sterling currency. Because if we quickly just jump over to the UK, there's two real major headlines that we're looking at this morning. One is that Theresa May's UK government is said to be ready for laws to rewrite the Brexit bill. If you remember, the kind of draft bill got passed, if you like, without any issues last week, and now it's the kind of more formal stage. So Theresa May's government is setting aside time for a parliamentary battle to overturn changes she fears could be made to her draft Brexit law when it's debated in the House of Lords this week. So essentially, as a growing number of Conservative rebels are preparing to join opposition lawmakers from Labour and the Lib Dems in an attempt to defeat May in the House of Lords. Now, if that does happen, then essentially what that means is she'd be forced to ask the elected House of Commons to vote again to undo the changes. And of course, this all would be to the detriment then of her target of looking to trigger Article 50 by the end of March, which, if anything, has helped at least have some clarity, as we saw last week, helping support the sterling currency, that at least in the short term, at least between now and really the next 4 weeks, we have some degree of a path that we're following. But this could quickly turn that on its head if the House of Lords start to make several amendments. It needs to go back to the House of Commons, and then this all then creates that new level of uncertainty, which is probably partially some of the reason why we're down at this 124 handle this morning for the sterling currency. Over the weekend as well, a lot of the times in terms of the timing of triggering Article 50, should all this go through without any issues, a lot of this, May's team here, this article saying, have told Conservatives to be ready to vote the week of March 13th. A lot of indications would be that it could be the 15th of March, all being to the government's plans when we trigger Article 50. And of course, the 15th of March is also the day of the Dutch election, which to me, tactically, from Theresa May's point of view, I would say is quite a strong play. You know, when would you want to fire off the biggest signal to try and force this negotiation period onto its most kind of, or have the cards in your hands going into those talks? Well, you want to do it when Europe is on the back foot, and certainly with the Geert Wilders and the far-right movement in the Netherlands likely to win that election, it's probably an opportune time to strike in those negotiations. So that kind of makes sense with that timing. The other kind of negative net headline to this new kind of uncertainty on this House of Lords hearing then is to do with Scotland, and essentially Scottish SNP government is seriously considering a second independence referendum next year. Sturgeon's team increasingly confident they can win as Brexit looms. So this seems to be creating just a bit of market nervousness this morning in the pound, and hence its underperformance. Just before I started talking here, just saw, well, we had an initial dip lower at the kind of reopening of electronic trade, if you like, from overnight. And then we've just broken that 124 handle on those lows seen at 23.94, which kind of marries up with that low print that was seen from the 17th of Feb. If we start to draw the chart out a bit further dated, we'll be looking back to, I think it's the 7th of Feb, lows coming in at 23.53. Look quite interesting from there on the downside. So certainly I'll be keeping an eye on the sterling currency today. Looking at this 124 handle through really February, although we did break beneath that on the 7th, you can see there that was that low at 53. Where we are at the moment looks susceptible to potential move further down to S2 and beyond, should this sentiment continue to build this morning. Likewise, though, the kind of alleviation, at least, of a runaway for Le Pen in terms of support, given the rising now of Macron with this support from three other candidates, all looking to strengthen his backing, has helped the euro currency and has brought about a bit of a divergence between the euro dollar and cable pair this morning. That also as well might be another underlying reason for the equities having a slightly positive tone. Obviously, you've seen how the French situation had been a net driver pretty much across assets last week. Obviously, bunds as well. We had a really strong move to the upside last week over the French situation. Also, as well, some very strong buying in the Schatz, which is the shorter dated 2-year German future, on the back of the fresh record lows in the yield as the QE program continues apace from the ECB. But we've paired off slightly. You would think that there could be a potential for a bit of profit taking at around these levels, given the gravity of the move that we had to the upside last week. One thing though, there was some ECB comments over the weekend that you should be aware of, and that's from this chap. You might recognise him. This is Jens Weidmann, the head of the German Bundesbank and the most hawkish member of the ECB, said that ECB will not end asset purchase program all of a sudden. And actually, I'd say these are quite dovish comments coming from a chap who's more often than not very hawkish in his commentary. Essentially, he said that ECB will not put a sudden end to its asset purchase program, speaking in German press this weekend. Did reiterate criticism of the ECB's asset purchases though, but saw them as very, He saw them very critically, but again has said that they're not going to come to an abrupt halt. And I would say that errs on being less hawkish, potentially, than what he normally is like. So, quite an interesting comment there from Saturday, I think is when he said that. Quickly, though, some other things to look at to put the week in a bit of context. Because when I actually look at the S&P, we are already back towards record type territory. Obviously last week we kind of grinded up. Well, if we look at February, it's been quite a phenomenal move, really. It's just the Trump train, if you want to call it that, 2300, we just continue to go higher. Any kind of brief nervousness, what was the pattern last week seen at the open of trade on Wall Street, seems to be countered pretty swiftly. And by the close on Wall Street, we normally get a bit of a ramp up to close, ultimately with marginal gains that we keep adding on consecutive sessions. Looking where we are at the moment, we're right up here testing, well, at R1 it looks like, providing a bit of resistance, but certainly on the front foot once again. Now, one of the things here has been that, will they or won't they hike in the month of March? It's very much up there as one of the main things which is driving this move in equities, because actually people's perception of March has been decreasing in terms of the prospect of that happening. What I'm looking at here are the 23 primary dealers that trade with the central bank, and what they're looking at in terms of their calls from when they think that the Fed will ultimately move interest rates next. So these are the kind of 23 select banks that do business on a daily basis with the Federal Reserve. So they're kind of seen as like the next section down on the pyramid, if you like, for the distribution of liquidity into the system. So therefore, they're quite intrinsic to the functioning of the financial markets. And of these 23 primary dealers, who you would think would have the kind of closest relationship in terms of the day-to-day and transactional side with the central bank, they would have the best insight as to how the Fed might be thinking going forward. And actually, there's only one of those 23 primary dealers that's looking for a March rate hike, and that's Jefferies, you can see in the center. Otherwise, the kind of broader consensus here is June, and actually, Barcap, Morgan Stanley are not looking for the Fed to move until September. You'll see here it's quite structured in terms of the rate hikes being forecasted around the periods of the release of the updated summary of economic projections and also the press conferences with Janet Yellen. So really May doesn't really feature here too prominently. You've got May by BNP, JP Morgan also looking for May, as to Mizuho Securities. Otherwise, it's all quite structured in, if they don't pull the trigger in March, then ultimately it's probably going to be June. And if not June, then September, and we roll on per quarter, if you like. Looking at this from graphically in terms of how these expectations have changed, and really it's the white line that you're looking at here, and that's the probability of March. And you can see we had a big ramp up at the beginning of the month, go all the way up to close to 50%, which is when it is priced in that they'll move, and now we've dropped back down again to 38. So despite some of the kind of hawkish comments that we've heard from various members of the central bank, the market is still not convinced at this point, and more dovishly priced than, say, probably what the Fed are projecting. I think from a market's point of view, any hawkish comments we've had from Janet Yellen have been more of a play of keeping options on the table rather than a credible time to strike for the next interest rate hike. If you're looking at May, that is actually priced in, so June more so at around 75%. Quick look in some M&A deals as well. This is probably the biggest one that you've probably read this morning. Consequently, Deutsche Börse shares are down about 2%, likewise for the London Stock Exchange. I point this out because this is a 29 billion euro merger in terms of euros. That's 25 billion sterling. So it's one of the biggest ones that we've had in our kind of local markets. The LSE and Deutsche Börse could collapse those talks after the LSE said the deal was unlikely to be approved by the European Commission. So that's maybe just a one slight net negative story, and what otherwise is probably some of the more macro developments is what's helping keep these equity markets just above water at the moment in minor positive territory. Quick look elsewhere. Crude as well is slightly higher this morning, and I would definitely be keeping an eye on that at these types of levels. If I just broaden out my chart here, if you remember just before the crude inventories that we had last week, we kind of got up. The fluctuation you can see on the wicks on that particular candle there, I've got my cursor on now. We briefly touched close to 55 again, but that 55, generally speaking, has been quite key for the market. That seems to be the kind of the top end of the range. You can see here, if I look at the beginning of Feb on the 2nd, again, we briefly looked above it, but failed to sustain a break on the 21st, and then just midweek last week as well, we got close to that point again. We're within 50 cents of that, so definitely be keeping an eye on that 55 if I'm looking at that range that crude has been in more recently. Okay, quick look at the session for today, and then we'll look at the broader week in context. For today, you have European sentiment numbers, business climate, confidence figures. These are all, I would say, second tier in nature. They don't really have too much of a market impact if you're looking at things like the euro or the Bund, unless they were substantially out of line. This afternoon, you do have durable goods, as well as it's got listed here, building permits coming out of the US. Pending home sales later this afternoon. Quick look at the durables. It's been quite an erratic data set, you could say, particularly October and November swing back to pretty flat in the prior month. So we are really looking for a bit of direction to come from these numbers. And then looking at the pending home sales report, as we've discussed last week, the home sales type data, or that intrinsic to the housing market's probably on a lower ranking for the Fed. Let me just transition my screen. So this is what we're looking at from the pending home sales. This is probably lower down the pecking order of what the Fed are looking at in terms of making their monetary decisions, and certainly a very good or strong number or a very bad number here in pending home sales. I don't think it's really going to change the game in regards to perception that the market has for March, and therefore net reaction might be minimal. Going back though, speakers wise, you do have Kaplan, but speaking at 4 p.m. Is a voter though, so probably keep an eye on that. But let's just have a look at the week, because ultimately one of the biggest events happening this week isn't actually economic data. It's, of course, everyone's favourite, Donald Trump. It's the State of Union address with Congress. That's happening on Tuesday. I don't think it happens till the evening. So probably we're going to have to wait for the Asian markets to show reaction, and then we'll have to trade the corresponding moves on Wednesday morning. But the State of Union address is always very important from a market's point of view, because it's been seen or been used historically by the president to outline policies and timelines going forward. It's always been the kind of key detailed signal to the markets then of what might happen and when it might happen. And if you think about it, the market from certainly an equity valuation perspective has been highly pumped up by the prospect of what Trump might do from a fiscal point of view, particularly around the area more recently of corporate tax. And so therefore, can he deliver in terms of satisfying what is now a quite high benchmark that he's set by promising so much? So it's kind of, do we get this week? I think that the Trump speech could be a defining moment for at least this week for sure, of do we power higher again? And we're talking about 2,400 in only a couple of days' time in the S&P, or do we start to then see a bit of a pullback as the markets become a little bit hesitant on what actually Trump can deliver in a reasonable time frame, which one could argue that implementation risk might be increasing the higher these equity markets go, in terms of him being able to get this all ratified through Congress. Otherwise, looking at the Tuesday schedule, pretty busy actually overnight. Some Japanese data, industrial production, retail sales, confidence numbers from the consumer for the UK is also released overnight. But then if you look at the US calendar, Tuesday afternoon, very busy. Prelim GDP, wholesale inventory, Chicago PMI, consumer confidence, and Trump, as well as three Fed speakers. Now again, I would have talked about this before. Having three Fed speakers, as you'll know, is quite a lot on one day. Why do you think that the Fed have scheduled three speakers on the day that Trump gives his State of Union address? This is all part of the Fed management of potential market volatility of when they plan and structure their upcoming schedules. So Tuesday is going to be a very interesting day, particularly US oriented, and then with focus on Trump. Wednesday, it gets even more busy from a global point of view. From overnight in China, you've got manufacturing, non-manufacturing data for the PMIs. You then get the respective final readings from various European nations, the employment situation in Germany, manufacturing situation in the UK with money supply, net lending and mortgage approvals. And then in the US, personal income spending, core PCE, ISM manufacturing. So very busy day on Wednesday. Thursday, it gets a little bit more quiet, but one of the standout figures here, definitely, which the market will be looking at from a FX point of view in the euro currency, will be the flash CPI estimate. So that's on Thursday morning. I think that'll be at 10 o'clock when it's normally due out for the CPI readings. So that would be a key figure. And then on Friday, you've got the final service PMIs. Then you get the same from the US with a slew of Fed speakers, including Janet Yellen. So that will be interesting. You'll note here that Friday is March. However, there is no non-farm payrolls. This is because March lands this week on the 3rd. Not enough time for the Bureau of Labour Statistics to accurately compute basically all of the information that needs to be done. So non-farm payrolls is not actually due until the 10th, that next Friday when we get that figure. So as you can see, very busy actual schedule for today, the exception being probably today. So if I was looking at my trading plan and my allocation of where probably most of my firepower is going to go for this week, probably it's not today. So you want to keep that in mind. Why get yourself into a situation right from the get-go when actually the biggest event is not actually happening until probably Tuesday evening, which is Trump. Then all the data starts hitting from Tuesday afternoon onwards. Wednesday then, you're going to get not only the busiest day from scheduled releases across the globe, but then also you get to digest Trump. So in my mind, Wednesday is going to be the most market moving day across assets. So not saying don't trade today, I'm just saying be realistic with your expectation of how you want to prepare for the week as a whole. Just as I've been speaking, the DAX just edging back into slight negative territory, the euro creeping back up. So a couple of things to be aware of here. I would say FX wise, my bias here would probably be euro dollar strength at this point. If we can get above pivot, that might be quite interesting to then look at trying to rejoin the move to go higher, whereas cable, possibly the opposite. I would say just around this House of Lords situation, there already is a bit of negative news flow. Layer in the Scottish situation about calling for more independence vote again. With the technical setup in sterling, I'd say you're more susceptible there for potential downside. Keep an eye on the French polls today as well. Any further, let's say, divergence in the second round between Macron, which currently stands at 61.39, if it starts to go to 62, 63, 65% to Macron, that's going to be a euro positive in that scenario. If we get the opposite, and 61 starts to drop towards 58, 55, then that will be a euro negative. That's how you have to perceive those or understand those polls when they're coming out in terms of market impact. The other thing, of course, that kind of validates my view of potential euro strength, if anything, in the currency pair is that French bonds are now enjoying their best run since the Brexit vote. So the 10-year yield back below 0.9% this morning, with the re-widening of the margin of victory for the centrist candidate Macron. Okay guys, 9 o'clock, so going to leave it at that, and I will see you in the chat room as per usual. That calendar of the weekly events, I sent out the morning research this morning, so please do have a read. Any questions, just let me know in the chat room. Okay, have a good session.